Bitcoin testing traders' resolve, playing with the short term 4 hour resistance. Are we staring at a potential drop to that CME market gap that we've been talking about? I said it's going to be a bumpy ride. So stick around as we dive deep into Wyckoff market structure and how a 50-week moving average could be tested right now. So welcome back, crypto crew. It's your boy Tom here, bringing you the hottest in crypto action. If you're ready to dive into today's market analysis, please give us a like, hit subscribe if you haven't already, and don't forget to come on over to X and follow us on X, where we talk about crypto and Bitcoin every day, all day, 24 hours a day. All right, let's get into it. Before I start, I just want to make a statement, okay? This channel will not always all be happy talk. All right, we're going to show you exactly what we see technically and what the market is doing. Now, technicals, of course, are an incredibly important role in my life. I mean, that's all I do is technical analysis, and I'm very well aware of both sides of the coin. And I want to show you both sides of the coin so you're prepared for anything that the market throws at you. I'm going to show you that I will have great points for interest, specific points of interest that you should be looking at if you're a short-term trader. So let's get into it. All right, let's jump into the action. Bitcoin's sitting right around 94,000 right now on May 6, 2025. But here's the big news. We saw that Bitcoin is starting to test the 4 hour support line right here. As a matter of fact, it's now breaking through the 4 hour support. Now, we've been watching this closely. As I mentioned yesterday, this break could be the break that actually sends us into that bumpy ride. Now, I want to jump down to a 1 hour chart so that we can get really into the minutia. All right, right now, as we're seeing, the marketplace itself is breaking the longer 4 hour support, but also this would be like a 1 hour support as well. So what I want to do is I want to throw up our resistance trend line here so that we could see exactly what we need to pound through in order for the marketplace to actually start to show that we're getting the breakout that we need. Okay, so I want to come up. I'm going to come up to this one. Oh, it's not perfect trend line because really you'd have to adjust your trend line. I'd have to come from here, come across. I can actually do that. Let's do this the proper way. I just don't want to do a sloppy trend line. Okay, so let's take this high right here. Let's connect these highs right here. Let's connect to these highs right here. And there we have our 1 hour resistance line. Now, the marketplace right now is tracking downwards towards this lower pivot level right here at the 93 on the 1 hour. Now, it could potentially fall a little bit deeper. Why can it fall a little bit deeper? It's because we've been talking about this CME gap. Where is it? It's right there. The CME gap right there sits between 91.4 and 93.7. All right, so we're kind of flirting with the 93.7 right now. We are still above the moving average on the daily. This is a 50-day moving average. We're still above it. But guess what? Technically, this marketplace could actually come down and touch this level. Not a problem. And actually do a little bit of market skid right down probably to like that 87,000. Now, I talked about that yesterday. I said that a dip down would actually be very, very healthy for Bitcoin. Okay, so really what's holding us back, and I'm going to get into the Wyckoff structure because I don't want to jump way ahead of myself. But if we go back to, let's go back to the 4 hour chart. Let's switch this back to the 4 hour chart. And I just want to show you something technically, okay? 4 hours, all right, let me get one of my fancy-dancy EMAs over here. This is a 20-bar EMA. Originally, we were sitting above the 20-bar EMA on the 4 hour. It was acting as a strong support. Now, once we lost that, we start dipping back down. So the marketplace is saying short term, this marketplace is coming off. It's just what it is. Now, where could we go? Well, I said deeply we could go back to that 87. I'm going to get to that in a second. Let me see if I can find that chart easily. Let me see. That's not the one I want. Sorry, that's not the one I want. Is this the one I want? Yes, right here. We talked about this yesterday. Marketplace actually could come down. We made a slightly higher high here. Higher low could occur at that 87.7. I said that we could actually skid through this. Skid meaning that short-term traders come in and start freaking out. Oh my gosh, we're going down, we're going down, we're going down. So it skids actually through the price. We could actually go probably maybe to 85,000. This is what I'm thinking. All right. Now, because on the 4-hour chart, the break is actually opening up, filling that CME market gap that we've been talking about. It's a key liquidity zone where like big players often like hunt stops down there. So short-term bigger players are going to try to hunt some stops down there. They're going to try to push through that level and then create like, a short-term Wyckoff type of spring back down up through the lower that up through the previous low, send the marketplace back up into the range. So if Bitcoin keeps sliding, we could see a quick flush to fill that gap before any bounce. But don't panic yet. Let's break down a Wyckoff structure to really see what's going on, all right? So let's come on over to a Wyckoff. And what we got going on here is if you're not familiar with Wyckoff, it's a framework that tracks how smart money like institutions move markets. Now, Bitcoin's been following a Wyckoff structure, and right now we're at a critical juncture. We're near the test phase. Now, back in April, we basically did a slight jump. We slightly jump across the river, okay, right across the creek. I call it a river, but it kind of failed right now. We're coming back into the test mode, all right, which is fine, and we could actually come down, like I said, down into that 85,000 level before we get the break up to jump across the river and break up to new all-time highs or test the actual 109, 110 high, okay? Now, here's the thing. What's preventing this? What is preventing? Why did the bull run stop? What happened here? Well, it's just markets. I mean, people are taking profits. Institutions are slowly accumulating. There's been signs. BlackRock been buying, Fidelity. Michael Saylor. All the guys have been accumulating. They're not really concerned with this small, short-term minutia, the way that we are. Okay, the way we look at this and we kind of focus in on like the micro price action. They don't really care about it. They wouldn't even care if the thing dropped back down to 68. They'd be quite happy with it because they'd be buying more, okay? Because in the long run, this thing is going to take off and it's going to go much higher. Now, we have a lot of reasons for that. We talked about, M2 global liquidity. We talked about what the Fed, we're waiting for the Fed to become dovish. I think that's going to be the next spark that ignites the upward movement. But we got to be patient, all right? So when Bitcoin finally broke through the 87,000 resistance, it had one thing going for us. When it finally came up through this 88,000 and we started moving higher, it had one thing going for it that we don't have now, okay? And I'm going to show you that right now. I want to go to, where's my volume? Where is my volume? There it is. Here's my volume, okay? It had massive volume when it happened, okay? We don't have volume right now. And volume is what really moves the Wyckoff structure, okay? That's what really, when we're inside that creek or that river, we need extreme volume to start pushing us up, to break us up to the higher levels. And we don't have it right now. So, why? I don't know. I really don't know. So, things are, getting a little dicey right now. We're stuck in a tight range right now. Let's say, between the 91 and the 95. The volume is telling us the story. We got to look for when volume starts to increase and price starts to increase. So low volume right now is a big red flag for the jump across the creek to the upside. Now, in order to break that 98,000, now, when we talked about this before, I want to go to that chart if I can find it. Okay, right here. In this area are $3 billion worth of shorts. $3 billion, that's with a B, okay? We haven't been able to get up through to trigger those yet. When we do, all hell's going to break loose. Okay, that's the point. But right now, right, I gotta say, the bears are actually in control right now. They're basically lulling the bulls to sleep, and they're trying to push down to lower levels in order to take profits. And I think that a lot of big players, and I'm not talking about institutions, I'm talking about big traders that have large amounts of Bitcoin, are actually, if they went short, they're doing well right now. They're probably looking to scoop around 85,000. If I had shorted, okay, and I had a large position, which I don't, just being candid, I would be looking to buy 85,000. That's really an area that I would think that, okay, this is a good scoop point. So that's what that's what I'm looking at. All right. So now let's zoom out to the bigger picture. Okay. So if I go to Bitcoin right here, I want to go to this one. Where is it? Sorry, fellas. Here's the daily. This is the 50-day moving average. All right. So we're still above it, which is good. But guess where it sits? It sits right around 90,000. Okay. Right near the CME market cap. Now I want to go to a monthly if I can. Let me see something here. Do I have a monthly chart somewhere? I should. Okay, weekly. All right, let's put up a weekly. That's fine. Weekly is fine. Let me get to this guy and let me make sure that I'm showing the proper one. Yeah, it's a 50. So let's throw it back up on a chart. Look where the 50 week is sitting. Okay, it's sitting right here at 80. So really, this does act as a pull down. I don't, if we were to get down there, that would be a really good place to just, if you're a hodler, you really want to add there. Now, I'm not talking out of both sides of my mouth. I'm trying to show the long term, the weekly that has a potential to break down. If it breaks down through that 85 that we were talking about, like I'm saying right here, that 87, we could go down to like that 82. That's a potential. So, like I said, there's not all happy talk here. I'm going to talk to you guys like we're sitting in our trading room and we're saying, okay, what could possibly happen? Well, we got to be prepared for both sides of this thing. Right now, the market's kind of slow. Can't dispute that. So, are we drifting lower? Yeah, we're probably heading towards that CME market cap. We could possibly get a skid. Now, the most important level to watch for at that point is that 87 to 85,000. And you got to watch price action there, because if the market actually does take a bigger plunge down, we're heading towards that 50-week moving average, which is at 81,000. So that's what we got going on. If we look back in time, when we had in 2017, 2021 as a history lesson, when the 50-week MA held, Bitcoin went parabolic. Altcoins absolutely exploded. So if we look at altcoins, right now this is daily. We're kind of slow in the altcoin market, but what we're looking at overall is the funding rates of Bitcoin themselves, they're still negative or slightly low. So therefore, the marketplace is extremely short. We're waiting for the Fed to basically cut rates. I think that is going to be, the spark that lights the fuse that brings us back up. So the 50 MA, tells us the long-term trend is still up. Okay. 50-week EMA tells us the long-term trend is still up. Short-term, we got a 4-hour dip that we're concerned with. We got to hold the 87,000 overall, but we could see the dip, back down to, potentially 81, potentially. Not saying it's going to do it. It's saying potentially because of that moving average. It could do it. So we just have to be cautious, all right? So, this level is the first level on the short term. It's basically right at 90. And I think it's a good level to pay attention to price action at. So what's next? I'm telling you, like I said yesterday, it's going to be a bumpy ride. So Upside, a breakout of 96,000 with a volume spike could finally get us above that, start to get jump above the creek. Okay. Now we said that we got the 3 billion shorts up here. We get into that zone and we're starting to take them out. That's going to really be the ignition that gets us up to that 102,000, 105,000, or our target really at 107. A downside break of say 91 confirms short-term, distribution in this Wyckoff, scenario. Short term, we're talking short term, where we basically could start to see the marketplace come down to that 87, 85,000. Macroly, the FOMC meeting is a big one. A hawkish Fed could spook, markets. Like if this guy doesn't come out and say that, hey, we're gonna, the market, we're gonna eventually cut rates, or they don't cut rates, that is going to be not good for the coin itself. However, if he does talk dovish, which I think there's about an 80% probability that he will, it could get us back up into, the the river that we've been talking about, or the creek that we've been talking about, and get us back above this short-term resistance, heading towards that $3 billion that we have sitting up here. Okay, so that's my take on this whole thing. Before we wrap up, crew, I got to let you know that we have a crypto community that you can join. It's absolutely free. And make sure that you could check it out right here. If, I don't know why that decided to
Bitcoin
do that.
coiling
Oh, I don't need
again.
that happening right now. All you have to do is click on this link right here. It'll take you over to this page where you can join. It's absolutely free. We'll be talking about markets and talking about, alpha and all this different stuff, Wyckoff, everything that you need. So make sure that you join our crew. If you want to follow us, our trading to a T, just click on our preferred broker. This is perfect for our strategies. Low fees, fast execution, everything that you need on a platform. And remember, always, crew, always, 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 always enjoy the party, but dance near the door. Make sure you follow us on X, and make sure that you trade with your head, not over it, and do your own research. Okay, don't be lazy. Cheers.